All right, welcome to a lecture. This is going to be a continuation series of my personal trading strategy. So you might want to listen very attentively. We've covered what the patterns are, what you're looking for on the 4 hour time frame. We've covered what the storyline is and how you identify a bullish and a bearish storyline. In this video, we're talking about how to understand your break of structure. The first thing about break of structure is just like storylines, you are dealing with the bodies of the candle. Now I have two scenarios here, but let me make you understand. The usual break of structure would be seen, for example, you see something like this. The usual break of structure would be like this. When, a certain area is broken to the downside, this will probably be another level of break of structure that is generally known. This would be called a break of structure. Many people can call it a break of structure. But the first thing you have to understand about our type of break of structure is the break of structure is going to be above or below the bodies of the candles, right? Not the wicks, not, you know. So basically, you want to write this down. The break of structure is a body close below or above the structured level. The structured level being the bodies of the candle. Let's take it for an example, right? For us to validate that we've had a bullish break of structure, first of all, the bodies of the candle is what we are looking at. So, for example, if we are looking for a bullish break of structure, we're not taking the wicks. We will disregard this high, and we wouldn't take this high as our break of structure, as in price piercing that high. We would look at what the bodies of the candle. So, the bodies of this candle would be a break of structure. If you can see price close, body close, that's the most important thing. Body close above the body of this candle or the candles that we're looking for structure breaking. For example, we have this area here, a bearish and a bullish candle side by side. You put a horizontal line and draw it out in time like this. This candle pierced it, even pierced this low, but we don't call that a structure break. Don't call that a structure break. What we call a structure break is when this candle, even this candle pierced and rejected, but this candle pierced, rejected, pierced and closed below the bodies, right? So that would be seen as a structure break. This in this example is a bearish structure break, and then in that example is called a bullish structure break. So basically, the bodies of the candle is where we're looking for market to close above or below. Now, I drew two examples here to the right side of the chart to understand the two types of structure break. We have the bullish structure break and the bearish structure break. When you write this down, you are looking for a bullish structure break once you start a bullish storyline, and you're looking for a bearish structure break when you have, when you are looking for, when you have a bearish storyline. Now, what does a bullish structure break looks like? The bullish structure break, we always have this behind your back that if you're looking for a bullish structure break, it would mean that you'll be looking for a candle body close above now this is for a bullish structure break, an N pattern. I also call it an A pattern. And how an A or an N pattern form is when we have a bullish candle and a bearish candle open side by side, right? So if you're looking for a bullish structure break, you would need to see this pattern where a bullish candle and a bearish candle closes side by side. No, so you know we're dealing with the closing price. You can draw that closing price out in time like this. After drawing it out in time, what you're waiting for, what you're looking for is another bullish candle to come and close above that area. So once you have another bullish candle coming to close above that area, it is said, and you can actually just say we have now a bullish structure break, right? So take this again. When you're looking for a bullish structure break, first of all, that would mean that you have a bullish storyline. So for a bullish structure break to be valid, you need to see a body close above a N or A pattern. They look the same. And how a N and A pattern forms is if you have two consecutive candles, which having the first candle as a bullish candle and the second candle as a bearish candle. Once you see a candle close above it like this is automatically a bullish structure break. A bullish break of structure, same thing, right? So this is a bullish structure break. and the candle closes above that level. Now, another example would be the other example would be the bearish structure break. This is when you see or you wait. For first thing you have to know is that when you're looking for a bearish structure break, that would first of all mean that you have had a bearish storyline. And once you have a bearish storyline, you're looking for your structure break. We're going to look at a few examples, then we end this class because I want it to be as easy and as simple. So if you have a bearish structure break, if you want to have a bearish structure break, that would mean that you are looking for another bearish candle to close below the closing price of a V pattern in the market. For example, we have a bearish candle and a bullish candle side by side. You can draw out the closing price of the first candle, it will be somewhere around here, right? And so for you to have a bearish structure break, you would need to see a bearish candle close below the closing price. So this candle is going to be a bearish candle, right? A bearish candle, right? Once you see a bearish candle close below the closing price, you can assume and you can safely say that we now have what a bearish structure break. Now the lines there are just basically demarcating the wicks of the candle, just to make it a little bit more realistic. Now let's go to an example. Let's look at this example on Euro USD. There was a trade on Euro USD on Friday. I want to use that for example. Now let's start from the beginning. We're going to take it from the storyline, then we're going to take it from the 4-hour time frame storyline, then we'll go to break of structure, and then we move from there. The first thing is that you want to start a fresh week on, because I know this already, so it's on Euro USD. So it's a trade on Euro USD. We're going to remove everything and every line on the chart, and we're starting from the weekly time frame. So the weekly starting helps us to demarcate the start of the week. We have the start of the week on this candle. The next thing we go into the 4-hour time frame to look for what's our price pattern, which is what bullish storyline. In this case, we had a bullish storyline because I took the trade. Right, so we have a bullish storyline start here. Once you have a bullish storyline on the 4-hour time frame, the next time frame you are looking for your structure break or possible areas for structure break is on the 2-hour time frame and on the 1-hour time frame. So in this case, we started our storyline by this time 2, which is 11, 22, which is 11. Then we're looking for our structure break by 6 because you're now awake by 2. That's when the immediate next candle opens. So if we're looking for what bullish storyline, you would need to see an area where the market closes above a N or A pattern where we have a bullish candle and a bearish candle side by side. So we want to go first into the 2-hour time frame and look at the time 6 a.m. So this would be the start of 6 a.m. right? So that candle is 6, this candle is 6. Before 6, the possible areas for structure break would have been here, right? You draw that place out in time. But another place you have to look out is as the market forms, there are times when it starts to form, new structural areas. Like for example, this was 6 a.m., but that 6 a.m. 2-hour candle closed bearish, which is just beside a bullish candle. So that would look like a V. So automatically we have another area for structure break, right? Remember this is 6. So we still have to look at what happened by 6 on the 1-hour time frame. By the way, you never go into the 30 minutes, 15 minutes, or the 5 minutes. So this is the 1-hour time frame, and this candle is what? 6 a.m. The 6 a.m. candle is a bearish candle, which is almost the same thing that happened on the 2-hour time frame. So we have this area as our structural break. Now we've seen that this 8 a.m. candle has closed above that area. So definitely we now have a bullish structure break because we have the pattern form here, right? We have the pattern for a bullish structure break. We have a bullish candle and a bearish candle side by side, and we are waiting for a bullish break of structure, which means we are looking for a bullish candle to close above that area in price. So there's loads of examples. We're only talking about structure, but like for example, this is going to be a bullish structure break. This candle having to close above this area. You see this candle did not close above. The bodies did not close above the bodies of this area. Obviously, that means that, we don't have a bullish structure break yet. Another type of bullish structure break would be here. So we'll talk about entries and all of that in our next video. I want this to be as short, as simple, and concise as possible. just understand what bullish structure break and what a bearish structure break is. Then we can move into entries and entry requirements. I hope this video was clear, and I hope you are learning something. Thank you so much for your time, and I hope you actually get to learn something at the end of this series.